Welcome back, everybody. Sive Morten here with the ForexPeaceArmy.com. Let's take a look again on the Forex market, as usual on euro currency and on Great British Pound. And today we have to adjust our trading plan, just because the very short part of it that we discussed in recent few sessions, suggesting that probably my market could try to complete the neckline first and touch the neckline before retracement starts. This scenario has been erased recently because all preparation in the background that was standing to support this idea has been vanished by the price action. Besides, yesterday, as you can see here with this action, we haven't got the Polish grabber. So daily foundation for this scenario also has not been formed. So we can't say that this scenario just failed because it even hasn't started. So based on the 3-drive pattern, also market ignored it and actually keep dropping. And the same we could say about the grabber, so we haven't got it. The reasons for that, probably you understand, this is recent FOMC minutes. We have talked about this in a Telegram channel. So in fact, the Fed has excluded the phrase about the decreasing of the inflation. And actually, in minutes, information mostly the same that we discussed in the weekly report. We said that despite recent big revisions and drop in payrolls, on average in this year, the numbers are moderately positive. They are not in some disaster. While the inflation problems and the hazard on the inflation are significantly higher and overweight the risks of the rising of unemployment. If even unemployment is just start rising, this mostly the very beginning of it. Inflation concern is real, so that's significantly changed the expectations of the market concerning the common meeting in September. In fact, it will happen in 2 weeks. Meeting will start right in the beginning of the September, if I don't miss something, on the 3rd of the September. So, and today we have the Jackson Hole, but probably Jerome Powell will tell something about this. That makes some pressure because this is really big revision of the expectations, which market actually already suggested that the 25 base point cut at least is already priced in. Currently, it's not the fact, and that makes dollar moving higher and pushing the overall performance of the other assets to the downside. So it means that currently we're turning directly to watching on hand shoulders pattern and start watching for a particular 1560 level. So if we are correct about the possible upper continuation, most probable that it will start somewhere in between 1520 and 1560. In fact, with the daily picture, this will be last chance for the bulls. If this will not happen, market keep going lower, it means that probably these lows will be taken out and we will get deeper downside retracement. So this is some kind of in the short-term perspective, this is last outpost for the bulls, which is particularly 1560 level. So on the full time frame chart, why this level is important, not only because this is Fib level 50% that euro currency likes most of all, but also take a look, this is a kind of the ABCD pattern, so the XOP target. And also, if you imagine this how in the shape of the butterfly, you also see here is an extension of the butterfly. Although it's not quite butterfly because it stands on the top. Usually butterfly bias stands on the bottom because it's reversal pattern. But just thinking in extensions, it's also 127 extension of this pattern. So that's why for now I do not see a lot of things to do. Probably to consider the next step, we need to see what the reaction will be on the market on the 1560, and then we will make the decision. Bullish patterns, some signs of the reversal, especially if Jerome Powell still will get some hints on the possible rate cut, probably could return back the overall situation. Otherwise, downside breakout, the acceleration probably will happen on the euro currency. On the Great British Pound, mostly the same stuff. So if you take a look on our hand shoulders, market actually is coming, it's its first level, market now is coming to the bottom of the left arm, it's forming some kind of the harmony here. And also this pattern important in 2 ways. First as a direct pattern, is possible upward continuation, but if the hand shoulders start failing, on the ruins of the hand shoulders, very often downside butterflies appear. It means that we could get some kind of the left wing if market will start dropping below the 618 support and start tending to the raising of the patient, that might happen some pullback and then collapse. It's very often happens. So on the Great British Pound will be the same conclusion. If market will not be able to form accurate hand shortest pattern, probably will fail and market will drop below 31.4 area. So this is how important common events and how they could impact on the overall situation in the markets. So let's keep watching.